Plain and simple, I'm going to show you how I personally analyze the market when a new week starts to lock in consistent payouts just like this one that I just recently received. So let's not waste any time and let's get right into it. All right, so we're looking at Euro USD. Today is Tuesday, June 6th, and I'm going to show you how I get ready for the week. When I do that, I try to answer two very important questions. The first one, where does price have the best chance of going for this week? Meaning I'm looking at highs and lows, typically previous week high and low, and I'm trying to determine which one has the best chance for price to go. The next question I'm trying to answer is, where is the trap and is it setting up or has it already happened and price is ready to go? So I'm going to show you two main things that I do here when I approach a new week. So the first one here, I'm looking at structure, and one of the best ways that you can determine market structure and direction is by going to a daily or weekly time frame. So for this example, I'm going to jump up to the weekly time frame. So here's the first thing that I pay attention to. So I will use the example of price coming up and price coming down and how you can also use it to your advantage. So before this big push, we see something very important. We can see these lows and price here pushes below these three lows here before it closes like this and starts its move all the way up to this high here, running this old high right here. Now, what I want you to pay attention to are all of the weekly lows. So here is the first low after running. Here is the next low. Here is the other low. And then you can see every single low is higher than the previous low, and it's respecting the low and running on the previous week high. So we're seeing previous week low being respected in a trending market, and we're seeing the previous high being attacked. And then we get up here. So here is the last candle that made a high after taking this old high here. The very next week, price fails to break above it and then pushes down and breaks the previous week low. From there, we can see that weekly high respected with this new week, and then this week pushes down, running on the previous week low. The same thing happens here. We see the high respected and we see the low attacked. This new candle here, we see the high respected as price made a new low right here, and this is the other week high, and it ran the previous week low. And we can see ever since it respected this high and ran this low, we have seen 1, 2, 3, 4, 5, and then currently the 6th weekly bearish candle with all of the highs being respected and all of the lows being targeted. So when we come into this new week, just based on that information, I would anticipate for this high to be respected and for this previous week low to be the target. But we can take it a step further. So let's drop down to the 4-hour time frame. Now, looking at the 4-hour time frame, we can clearly see price has been bearish and it's making lower highs and lower lows. And then we get here. So what I'm going to do is I'm going to remove some of that price action. What I do now is I try to get in the minds of how most people are trading a pattern like this. How are they trading this bearish trending market? And in most cases, it's something like this. You're going to see trend lines drawn like so. And then you're also going to see support and then resistance. Support and resistance. And you can see every time price breaks below, it comes back up and tests it, and it comes into this area of resistance and pushes down. And that's how we get this trend line established. And we can see the same thing up into this price action here. We can see the support level, and then it pushes up into the trend line and breaks through it. And then it's being respected. 1, 2, and then it pushes away. So with that in mind, I am always taking into consideration where the bulk of people are getting into the market. So one thing I like to do, and this is something I highly recommend you do as well, pull up TradingView, search the pair that you're marking up, and you can see here, basically everything that we just talked about. A lot of trend lines, and then you have support and resistance areas. So that's out of replay mode. You can see it broke through, and naturally, once it breaks a resistance level, it then shifts to buying. So you can see here, same thing, trend lines, and the bulk of it is pretty much going to all be trend lines, support, and resistance. Okay. So with this information, we know in this current state, people are looking for shorts. Now let's go into the current price action. So at this moment, we can see something really important. Price pushes through aggressively through the trend line, through this break retest level, and then it automatically shifts to buying. So a lot of those things that I just showed you, you can see here, they would be looking for price to break through it, which it has. And then once it goes through the other side, they look for the buying. Same thing here. This is showing after it has broken through, and then they look for the retest and they look for buying. So if traders are buying now, what is the only and most obvious low available? That would be right here. So people are looking to buy on this newfound support, and their stop loss is most likely going under this low. Perhaps it could be going under here, but this is the only real swing low here that started this impulsive move. So this becomes a target. So with those two things in mind right there, we saw the weekly highs being respected and the weekly lows being run on. And we can see that the majority of traders are most likely buying in this scenario, and you don't have to take my word for it. We can see that they're looking for a break retest, break retest, break retest, buying, break retest. This is how majority of people, same thing right here, they're all looking for it. So it's not just something I'm imagining. This is really happening right here. So we know that this low is where stops are accumulating. So I always ask myself, where can price run that's going to hurt the most people? And for me, it would be this low. So now that we have this information about the higher time frame, the weekly, seeing that we have been bearish for almost 5 weeks now, coming into the 6th week, we have seen the highs respected, we've seen the lows targeted, and now we can see this. This was enticing traders into the market too prematurely, now inducing them on the buy side of things, putting the stop losses under this low or even this low. That is what we want to target. So when I come in and I start a new week of trading, I am trying to determine where does price have a really good chance of coming to. That's all we want to do as traders. We're trying to determine if price has a higher chance of coming for this high or for this low, and then we stack the evidence. So what I'm going to do is I'm going to mark up some things here. We have this area here. This was a point of interest for me because we saw price run up above these equal highs, and then we can see a strong engulfing candle, which came down and make this lower low. And again, that was that break retest level here. So before price pushed up and broke, we know that there were a lot of people probably looking to short here. Even when it retraced back here, this new break retest, there were people probably shorting in this area too, and stops were probably accumulating above this area. So here was my first POI right here. Let me change the color of this, and I'm going to slide that over. So based on what we're seeing here coming into this week, we saw price push up aggressively and run this area. This was a resistance area. This is where orders and a lot of opinions were being formulated, and we saw price push up higher. And what tricks people is if I go to a line chart, it looks like a break of structure. But just because one impulsive move at the bottom of a bearish trending market pushes up and breaks structure, it does not mean price is going bullish. It just means there's a potential that price could reverse here. But what you don't want to get caught up in is price pushing down and continuing, and you just got caught up in the trap. The only way that I would shift from bearish to bullish in this situation is if this was a confirmed lower high, meaning it was a failed low. And we do that by looking for price to continue breaking through this area, closing above this high, making a new higher high because it's higher than this high. So then we would have a low, a high, a higher low, and a higher high, which gives us more confirmation that the sentiment is shifting from bearish to bullish. Otherwise, the outlook and the forecast remains the same, and I look for bearish price action. Now that we have that established, now I just look for areas that I can use for entry or areas that I would anticipate patterns to start developing that can offer entry that are in alignment with what we're seeing here. You never want to open up a chart and just mark something up and then zoom out and look for supporting reasons why you should take that sell or that buy. You want to do what what we just did there first. You want to get a higher time frame narrative. You want to be able to read the story that's being told. Once you do that, then you zoom in and you start looking for potential entries or potential patterns. So with that being said, what I would look for here is this as a point of interest. This was that last up candle that ran these highs that came into this POI before melting down. And we can also see a strong push off here. And just recently, price came up into this area and showed a push down. So more traders are probably looking for buying opportunity right now, looking for price to continue up. So right now, I'm going to put my sessions on so we can see this was Asian high right here. This was the previous day high, and now we can see London made a push down, and then the overlap price is just starting to push up a little bit. So there's a couple things that I would look for. I would mark up this area here. That would be a potential zone for me. And then I would also look for price to run this high right here. And what I would look for is something like this, either price to push up into this area and then give me a pattern or a break of structure and confirmation that price is ready to then continue down and start targeting lows. And one thing I like to also do is correlate my setups with the economic calendar. So I'll pull up the calendar and I'll see, okay, what day do we have red folder news events? And what day do we not have any events? So this week, Monday, Tuesday, Wednesday, we really don't have much going on. And then Thursday, we have unemployment claims. So that tells me right there that Monday, Tuesday, Wednesday, that's going to be time for setting up and building and inducing traders into the market too soon, like we're seeing here with people coming in on the buy side. Then with the big red folder news event on Thursday, that tells me that there's a really good chance for manipulation and or the continuation to start targeting this low down here, which is our previous week low. So a couple different points of interest, a couple different ways you can get into this trade. One, back up in this area here, or wait for price to run this high or come into this area and show breakdown. It's always finding the higher time frame targets in narrative first, and then finding supporting setups that correlate with that. So this is how I approach every single new week with all of my pairs on my watch list, just trying to identify where does price have a good chance of going this week based on everything that I showed you in this video. If you like this video and you got value from it, make sure to like and subscribe. And if you want additional help becoming a consistently profitable trader, check out the description below, and I'll see you in the next one.